It's been just over a month since the government sent out stimulus checks, and new data show that many Americans put that money to use in the stock market. According to data company Envestnet Yardley, trading was the second or third most popular use for those funds across income brackets. Americans making between $35,000 and $75,000 a year increased their trading by 90% compared to the week before they got their check. With this increased activity, how could the broker-dealers be setting up? How are retail traders setting up, Pete? I mean, when you hear about Americans gambling away their stimulus checks, I don't know. That makes me a little nervous.
That makes me a little bit nervous as well, but I will say that the volumes speak for themselves, Mel. I mean, it's absolutely off the charts. As a matter of fact, if you just go over the last couple of weeks, we had about a 5-day stretch where we were averaging about 31 million contracts per day. When I started on CNBC back in 2007, we averaged about 10 million contracts per day. Gives you a little bit of an idea of how crazy things have become in terms of these volumes. Last year, we had a record volume of a little over 20 million per day. This year, we're running on about 27.5 million per day. So there is volume there. We've absolutely seen a lot of this throughout the pandemic. I'm not so positive that I would be encouraged by the idea of these checks going if indeed that's what's happening here. But we certainly are seeing the volumes, and the volume explosion is there. Mike can speak to this as well. I've never seen so much option paper in my life, and you can see it in the numbers. The numbers don't lie. It's amazing how much is out there, but I hope like heck people understand what they're doing, Mel, because they better be educated. The options world can be a very, very violent moving thing, and you have to understand what your risks are, so hopefully they do.
I mean, the stock market falls into the same category. I mean, this is money that people should be willing to lose completely and feel comfortable in doing so. In theory, online brokers should see a benefit, Jeff Mills, except for the minor detail that it's been a race to zero when it comes to trading commissions.
Yeah, that's exactly right. And I guess my take is a little less scientific than Pete's, but just anecdotally, I've gotten phone calls and texts from friends asking about getting into the market. And I don't know that that's necessarily stimulus check related, but you are seeing it. And it might sound a little bit silly, but our buddy Dave Portnoy is a massive following in that younger demographic. And I think that day trading that he's doing actually might have had an impact on people signing up for some of these online brokerages. I think looking at the stocks of some of these companies, E-Trade has held up the best, but it's actually bumping up now right against its downward sloping 200-day. So I think it could be at a little bit of a tough spot. I would prefer a name like Schwab. Their earnings growth is a little bit quicker, and they have the size and scale. You see them gobbling up companies like TD Ameritrade and looking at USAA's investment assets and others. So I prefer a company like that with size and scale who can invest in technology. So I think all things considered, with Schwab being down 30%, if I was looking across the board, and I'm assuming that this is actually going to have some sort of an impact on these companies, I'd probably choose Schwab. I guess my only concern is that maybe some of these people have been drawn into the market. You've had this massive rally, and everybody assumes, wow, you know what, this is pretty easy. But then if the market shakes and you have a little bit of a problem, I wonder how sticky some of these accounts actually are. That would be my question.